Majority of forex traders lose money to the market because they don't understand supply and demand. My name is Daniel, and in this video, I am going to show you what I understand about supply and demand and how you can actually trade it without no fear of doubt. Supply and demand is very important in forex trading. If you don't know how to trade supply and demand, you'll keep struggling and thinking that the market is built against you while you are losing your hard-earned money. And you may want to think that you want to quit. But before you quit, I want you to know that this video is going to be an end to your lack of understanding about supply and demand. So without no big grammars, let us get right into the video.
Alright, so when we are talking about supply and demand, it is a very easy concept to understand. Alright, so what supply means in the financial market is that when there are more sellers in the market than the buyers, okay, more like the sellers has overthrown the buyers in the market, and the sellers is going to make the markets to be selling downward. All right, so that is for supply. And when we are talking about demand, demand simply means when the buyers has overthrown the sellers in the market, thereby the market will be going up and up. All right, and I explained to you in the previous video that we have consolidation markets as well. So, and I believe that you understand what consolidation ranges, what that means already. So right now we talk about, so this is an example of supply markets. Okay, so you can see that the buyers were actually in control of the market, but at a point in time they were unable to continue the movement upward because there is no more fuel. Okay, so like there is no more fuel. Normally if the buyers are going to be in control, there is going to be a little retracement before they continue the movement. All right, I use car to explain to you. All right, so when a car is moving and the car actually needs to switch the gear before it continue the next the next phase of the gear. All right, so is same thing applies to the market. The market was actually buying up, going up, and at some point they need to seek for more liquidity in the market. So this is what you actually need to understand, because it is this supply and demand plus liquidity and smart money concept that the markets move. All right, so what you want to look out for is your supply area, and looking at your supply area, you need to understand that you see that the market was buying up here, and at some point in time they were unable to continue this movement. So what the buyers are actually trying to do right here is that they want to seek for more liquidity in the market. And I told you that liquidity simply means where there are stop losses. Okay, so stop losses means funds that are sitting either below or above ranges markets. All right, so when buyers got here, they were actually trying to seek for more liquidity before they continue the movements. All right, and it is the smart money that use this concept mostly. Smart money concept, they seek for liquidity, they seek for stop losses in the market, thereby causing some broke traders to lose, and by fueling their own funds before they move the market to their desired direction. So you can see that the buyers got here, they were unable to continue, so they were trying to seek for more liquidity around here, but at some point in time you can see that they push the price down. Okay, the price switched downward. Now you can see that the buyers of the market has changed from buying to selling right there. So now when you see sellers broke through a ranges area like this, okay, what you have to do is that you want to wait for a retracement. So this is what is going to confirm that the sellers are actually in the market. previously it was the buyer that are in the market. Okay, so but because the buyers are still trying to seek for more liquidity around here, but because they were unable to seek for their own liquidity, the sellers pushed the price down. Okay, now the buyers of the market has changed from buying to selling around here. So what the opportunity that you will be looking out for is that you want to sell the market. So immediately you see that the market has broke through this level, what you have to do is to wait. Okay, you have to wait for the markets to go down to where it wants to go, then the market have to retrace back to your supply zone. Okay, so this is the point at which the sellers broke through this consolidation area. Okay, so this is why I mark this place as the supply zone. Okay, because these are the points at which the sellers overthrown the buyers. Okay, so now you can see that the sellers got here and they retraced a little bit respecting this supply zone and push the price down more lower. Now I believe you understand that. Now let us say rally based rally. Okay, so now it is the opposite of rally based drop. So we can see that the buyers are in the market, they were buying, and at some point they were unable to continue this movement. So what they are actually trying to do is that they want to seek for more liquidity in the market before they continue the upward movement. Now when you see a liquidity when you see a ranging market like this in the market, you don't trade. All right, you don't trade. So what you have to do is that you want to wait for a break of that consolidation area before you add one more confluences. So but at some point you can see that right there the sellers didn't push the price down. Okay, and the reason why is because the buyers are in control of this price, are in control of this market, and they push the price up. They broke through this consolidation area here, they broke through it. And you see, when you see a trade like this, you have to wait, because you can see that the buyers were actually buying up and up. All right, so what you have to do is that you want to wait for a retracement. Okay, you want to wait for a retracement, more like the buyers have to come and retest this demand area. Okay, so this is supply and this is demand. All right, so you see that the buyers retrace a little bit respecting the previous demand area before they continue the major move to the upside. I believe you understand that. Now let me go to the next all right, so now we can see another type right now. So yeah, this one is drop based drop and drop based rally. You don't need to crime that in your head. All right, so what you just have to understand is that we can see that there are more selling there are more sellers in the market right here. You see, the sellers are selling the stock down here, and at a point in time they were unable to continue the movement to the downside. You know, I told you the market will not go on a straight line. All right, so there's a need to seek for more liquidity in the market before they continue their major move. All right, so you can see that there is a ranging market around here. So when we see a ranging market, we have to wait for a breakout. So now you can see that the market was selling, okay, and at some point it was consolidating. So when you see this, you have to wait. Then immediately they broke through this ranging market. Okay, you still have to wait. You don't enter the trade around there, you don't enter around there, you don't enter around there. So now there is going to be a retracement. All right, so this is the retracement. All right, so when we have a retracement like this, is going to respect this supply zone. All right, so this is our supply zone. Immediately you see that the price has tapped into our supply zone, then we are going to take a sell trade. All right, then you can see the opposite of this supply zone, which is the demand one. You can see that the market was actually selling downward, and at a point in time they want to seek for more liquidity in the market before they continue their movements. All right, but you can see that in this case the market did not continue downward. Now what it did is that after this consolidation area here, they broke through higher. Okay, they broke through the market upward side. Okay, and when they broke through at the upward side, we have to wait for retracement before we enter the trade. And you can see that immediately they broke through this place, there is a retracement in the market respecting this demand area. All right, so this place has actually turned to our demand area. So when there is a retracement down to our demand area here, then we take a buy trade. So now let me go right into the market and see some examples. Okay, so for example, so let me use this as an example. All right, so let me clear up this chart right there. Okay, so that you can understand what I'm trying to explain to you right there. Okay, so I'm going to clear all these charts. Okay, so right now you can see that this is 15 minutes time frame. All right, so we can see that the market was actually buying. Okay, there were more buyers in the market. Okay, and when the price reached this point, all right, so this is good market, by the way. So when the price reached this point, all right, they were unable to continue this upward movement because they need to seek for more fuel in the market. Okay, they need to seek for more fuel in the market before they continue that upward movement. So what the market did right there is that immediately it got right there. Okay, so we see that there is a retracement. Okay, there is a retracement like this, and you know, the market created a double bottom around there. Okay, and there was a movement to the upside. Now when we see a break of structure in the market, okay, if you have watched the previous video, you understand break of structure. So this is our break of structure. Now we know that immediately price has broke through our break of structure, we have a demand area at below of that area. Okay, so what I have to do right now is that I want to mark out my demand area. So now, how do you mark out your demand area? This is not your demand area. Okay, this is not where you mark your demand area, because if you mark your demand area around here, okay, if you mark your demand area around here, can you see what is happening now? Okay, if you mark your demand area around here, you can see that when the market goes up right there, okay, it retraces again. Okay, it goes up, it comes down, it goes up again, it comes down. Okay, and you can see what is happening right there. And when the market reached this stage, it comes down, broke through this level. Okay, it broke through this level. So it means that this is not our valid demand area. That is not our valid area, because your demand area will have to hold, you know, it have to hold that position. So this is how to mark out your demand area. Okay, you know, I said that your demand area will be below break of structure when there is a break above this area. Okay, so this is how you mark out your demand area. So what I'm going to do now, this is the last candle. All right, this is the last candle that formed below here. So this is the candle that I'm going to mark. Then I'm going to change, then I'm going to extend this to the right. So now you can see this clearly now. So let me explain what is happening right there. So now I have marked out my demand area. So when the market retraced down here and it broke through this level, so now what I have to do is that I will not enter the trade around here. I will not enter around here. Now the reason is because if I place a long position around here, okay, if I place a long position around here, my stop loss will want to be below this demand area. Now can you see that this stop loss is very wide? Okay, this stop loss is very wide. Or I place my stop loss somewhere around here, all right, or somewhere around here, and probably take profits around here. But you can see that immediately the price broke through this level here, it was continue going up. All right, but at some stage, because market needs to seek for more liquidity, and you know, after a break of structure, we expect that the market is going to retest the demand area. It's going to retest this demand area. Now when the market goes to this stage, the market was now reversing again. Now immediately price has reversed past your stop loss. It means that you have lose money. Okay, you have lose money. So now you don't need to undergo this trades. So the best thing is that you want to wait for a retracement when markets reach this level, because you don't just jump into trade. Okay, so when markets reach this stage, you want to wait patiently for your price to retrace down. Okay, that it should retrace down to your demand area. Now you can see that when when the price reached this stage, it didn't come straight down to this demand area. Now market retrace again, it comes down again, it didn't come down. Okay, now it goes up. So what is actually happening right there is that I can see a consolidation market around there. Okay, this is a consolidation area. All right, now can you see that? Can you see that? Now can you see that? Can you see that this is a consolidation area? So what is actually happening right there is that the smart money are building liquidity in the market. Okay, when you see a consolidation like this, the smart money, the big banks, the financial institution, what they are actually doing is that they are building liquidity in this zone right here. So when you see markets doing creating a consolidation price like this, you don't jump into trade. So what you want to wait for is that you want to wait for a breakout to the upside or to the downside before you had more confidences to know if you are going to buy or sell. Now in this case, when markets reach this stage, you can see a breakout to the upside. So it means that we are going to look out for our buying opportunity. Now again, you don't enter the trade around there when there is a breakout. You don't enter the trade, because if you enter the trade after a breakout, you keep losing money to the market. All right, so you can see that, that I said that the price has to retest this demand area before it continues the upward movement. Now you can see that after this breakout, market retraced down again. Okay, it retraced past this consolidation area, and this is what we simply call liquidity in the market. So what actually happened right there, okay, what actually happened right there is called liquidity sweep, because above below this consolidation area, there are stop losses that has been set up down there. Stop losses of those that they don't know how to trade the financial market, and this is what the smart money look out for in the market before they start their major move in the market. So what actually happened right there is that they sweep all the available liquidity around there. Okay, so and what I'm trying to explain right there is that there are some traders that they will set their, if they enter around here, okay, they will set their stop loss maybe below this candle right there. Okay, and you can see what the smart money did to them. Okay, so they broke the beginner trader or novice trader. They will think that they are making some profits, but what the smart money did right here is that they sweep all these stop losses that they have set already. Okay, they sweep all these stop losses down here. You can see this candle. Okay, so if you remember, I showed you this candle. Okay, I showed you this candle. Let me reduce this down. All right, now I showed you this candle. This is the liquidity candle. All right, so this is the liquidity candle. So you can see that this liquidity candle is very effective in the market. All right, so now this is what happened. The smart money has sweep liquidity in the market, liquidity of stop losses, and they have swept them. Now you can see that it is this candlestick that respects our previous demand area. So you can see that when trading the financial market, you actually need a lot of patience. Okay, you don't rush into trade anyhow. So let me just delete this. Now you can see that immediately the smart money come into play. Okay, so this is where we can actually look out for our buying opportunity. Okay, so in fact, if I go down to the 5 minutes, we can still have um, our sniper entry. Okay, we can have our sniper entry. So okay, I want to look out for that. Okay, so you can see immediately price retrace down, it tap into this demand area, and so this is where you can actually look to buy the market. Okay, so you place your entry right there, you set your stop loss below here, and you set your take profit to the next supply, to the previous supply area, which is this one, and you can see that the market actually respected this analysis. Okay, it respected this analysis. You can see this is how supply and demand actually work. So let me go down to okay, this is in the form of demand. So I'm going to go down to use what is it called, okay, I just explained even supply and demand right there. Okay, I just explained supply and demand, but let me show you more example. Now. Okay, so let me look out for more examples. Okay, all right, so I'm going to use this example. All right, I'm going to use this. So what we can see in the market right now is that let us start from this range. Okay, let us start from this range. So right now what we can see now is that this is in 1 hour. All right, this is in 1 hour, and now what we can see in the market is that we can see that the market is in an uptrend. Okay, the market is in an uptrend. The market is buying upward. Okay, so right now how do we break this down? So we break this down by marking our break of structure. Okay, we mark out our break of structure from here. So we have our break of structure. Okay, now when we have a break of structure, I told you that we are going to have demand area below it. Okay, so now we can see that we have this level being created right here. In fact, we can simply say this is our main break of structure. Okay, so let me just delete this. So this is our main break of structure. Okay, so this is our main break of structure, because you can see that the market was actually consolidating around this area. Okay, this is a consolidation market. All right, so this is a consolidation market, and you can see that immediately the market was consolidating in this box. It was not going up or down. Okay, it was not breaking past this box, but at a point in time the buyers overthrown, they continue the upward movement. Now it is not good that you jump into trade like this. Okay, when you see a breakout like this, you jump into trade like this. All right, you don't jump into trade like this, because the market could reverse and you may lose your money. So what you have to do now is that you want to mark out your demand area at this below this consolidation level. So where is our demand area? Right there. Our demand area is going to be this, let me say, this last candle here. Okay, our demand area is going to be this. All right, because this is the last candle that formed below here. So let me extend this candle, let me extend that and change the color. Now you can see that the market broke through this consolidation area. Okay, let me mark out the consolidation area again. All right, So um, mm, mm. All right, right, let me change consolidation. All right, so now when this market broke through this consolidation area to the upside, you know it has created a break of structure right there. So now we want to wait for the market to come and retest our demand area around here before it continue that upward movement. So now you see that the market was actually going up on and on. Okay, the market was going up, and at some point in time the market actually could not continue to go up again, and it was selling downward. Okay, so what actually caused this selling downward is that the buyers could not continue to, they don't have more fuel to continue this upward movement, so they have to be a retracement to this previous demand area before they can continue that movement. All right, so you see that the market sell down, the sellers took over the market and sell the market down, and what they are actually doing right there is that they want to come and, they want to come and respect this demand area again before they continue the upward movement. So now you can see that when the market was selling down here, okay, you can see that it got to this stage, it was retracing back up. So now for beginner trader, what they actually do is that they will enter a long position around here. So when they enter a long position around it, they are going to set their stop loss somewhere around there, and they want to make their profit up to this stage. But you can see what actually happened here. This is what liquidity is. Okay, so this is just a trap. Okay, this is a trap that smart money has set, okay, for broke traders. So right there you can see that the market, this level, it has not actually respected this demand area, it has not tapped into this demand area. So now when the market retraces a little bit, they actually sell downward. Okay, they consume more liquidity of stop losses, breaking through this previous low. So this level right there, we call it liquidity sweep. All right, so this is our liquidity sweep. Then this is where immediately you see price tap into this demand area. You can see that it has tapped into this demand area. This is where you can look out for your buy opportunity. This is the best place. Then you set your stop loss below here. Alright, you're welcome back. So yesterday night my laptop switched off, the battery run down. Okay, so I just have to continue this morning. So what I was explaining is that we want to see our demand area being respected, and I said that our demand area is always below break of structure. Okay, so and you can see that we mark out our demand area around there. Okay, so let me zoom that so you can see. So this is our demand area around there. Okay, so this is the demand area. Okay, that's the demand area. Then so what we were waiting for is price to retest our demand area, and I told you that when price was actually when price was actually going up, okay, it was going up, I said we don't enter the trade right there, we wait for price to come and retest our previous demand area. And when price was actually selling down, okay, when it was selling down, we are waiting for a retracement back to the demand area before the upward movement continue. So you can see that when price was selling down here, okay, it was retracing as if the buying has actually started. But I said the broke traders, the traders that don't know how to trade yet, okay, that they want to trade because of fear of missing out, they enter the trade around there, and thereby the price retrace again, stopping all the stop losses out. Okay, So this is where liquidity has been swept. Okay, and you can see that immediately price swept through this previous low. You can see that it swept the liquidity down to the demand area. You can see that this candle actually respects the demand area. It comes down to the demand area before the major move starts. So this is the best way that you can enter the trade around here. Okay, so I am deleting this. Then you set your take profits at the next supply zone. Okay, so we can potentially enter there and set our TP right there. Okay, so this is how market mechanic works with supply and demand. It is very easy, very easy to understand. It is very easy to understand. Okay, so let me go and look for another scenario. Okay, I will look for another scenario of applying this strategy. So let me go and look for another scenario now. Alright, so this is another scenario of applying your supply and demand in the market. So we can see that this market was actually buying up. Okay, the buyers are buying the market to the upside. So what do you have to do? What you have to do is that you want to mark out your break of structures. Okay, so let me just start the break of structure from top here. Okay, this is a break of structure here. This is a break of structure. Then we can actually mark this place as well as our break of structure. Okay, so this is how you follow the money. All right, this is how you follow the money. This is another break of structure. This is another break of structure to the upside. Then if you continue to look here, you can see that there is another break of structure around here. Okay, there's another break of structure around here. So now one thing that I want you to understand is that below every break of structure there are demand. All right, so there are demand. Okay, as we mark this below here. Okay, let me just start from here. So below this break of structure, we know that we have a demand area there, so which is this candle. Okay, so we have this demand area here. All right, so that is our demand. Okay, that is our demand area. Now we need to mark out our demand area below this break of structure as well. So I'm going to mark this last candle here. Okay, so this is another demand zone. Okay, then we continue. Okay, we can see that this is another break of structure, so we mark out this level right there. Okay, so that is another demand zone. So now alright, so you can see that this is another break of structure to the upside, so it means that we have a demand area around there. Okay, so one thing is that all your demand area may not be respected. Okay, so price is likely to respect the previous demand area. Okay, it's likely to respect the previous demand area. So now look at what happened here. Okay, look at what happened here. So when we have this break of structure to the upside, okay, when we have this break of structure to the upside, okay, you know, we don't enter the trade when the markets break out of at this level. Okay, so now one thing we do is that we want to wait for a retest of this demand area, and you can see that price was actually going up. It comes to this stage, creating an higher low, retrace again. It couldn't continue the upward movement because you can see that this high is very low to this. So what price is actually doing here is that it wants to seek for liquidity and to to retest to the previous demand area, and this is what you see that it's happened here because it's retesting this demand area around here. So when you see price retesting a demand area, you can simply place a buy opportunity. Okay, and when you place your buy opportunity like this, you set your stop loss below the demand zone, okay, below this demand area here. So you set your stop loss around there, because if you set your stop loss right like this, the market is going to take care. You can see that this candle has actually come past this stop loss, so you give your stop loss a breathing room. Then after that, you set your TP to the previous supply zone. Okay, you can see that the price actually took profit here, and if you actually want to take it for longer, for more days, you can actually set it up right there. Okay, you can see that the market actually skyrocket upward. Okay, but just to be on a safe side, you set your stop loss at the next, sorry about that. So just for you to be on the safe side, you set your take profit at the next supply zone right there, and easily you make your money right there. All right, so let us just follow this money. Okay, let us follow this money. You can see that the market was going up again. Okay, and okay, we can see another break of structure to the upside. Okay, in fact, we can't really call this a break of structure. All right, we can't really call this a break of structure. Okay, this is the break of structure right there. This is the break of structure. Then we know that we mark out our demand zone below that zone. All right, so now look at what happened again. The price goes up, okay, and it comes down to retest this demand area, and immediately it retests this demand area, it continues the upward movement. All right, so this is why it is good that you manage your expectations. Okay, you manage your expectations, because immediately price tap into this place, and when you enter this zone right there and you set your stop loss below this demand zone, what you have to do is that you set your take profit at the next supply zone. Okay, at the next supply zone. But just come to think of it, that adding been that you set your take profit all the way up here, okay, you can see what happened, that price actually come to the next supply zone and retraces back again and causing you to lose money. All right, so the best thing is that you set your TP somewhere around this supply area. Okay, so this is the supply area right there, so you set your TP around there, and you can see that easily you are going to make your profits. All right, so I don't want this video to be long. Okay, so I'm still going to delve more into supply and demand, but easily you can see that this supply and demand actually work. It actually works. This is how the markets move, so you don't need to stress yourself about anything. So this is the simplest way that I can explain supply and demand for you. So what you have to do right now is that you want to also implement this strategy. Okay, you want to implement this strategy. So, and after you implement, I believe that you are going to understand this more deeper and deeper. So I'm going to see you in the next video. Thank you.